Question number 185. An importer from Cochin import goods from an exporter in US. The vessel carrying the goods reaches Mumbai port first, and from there goods are transshipped to Cochin port. So first it is coming to Mumbai port and then it is transshipped to Cochin port. Determine the assessable value of imported goods under the Customs Act 1962 from the following particulars. So what will be taken as the assessable value in this case? So first, cost of the machine at the factory of the exporter. Again same point came. Cost of the machine at the factory of the exporter. Transportation charges from factory of exporter to the port for shipment. So that will come in FOB. Handling charges paid for loading the machine in the ship. So that will also be coming. Then, so 20,000, 1,000, 100. Buying commission paid by the importer will not come. Freight charges from exporting country to India. Why are we not taking here 20%? Because in case of vessel, we don't have to take actual or 20% of FOB, whichever is lower. So here, one adjustment which we have discussed, that is the freight includes freight from the factory of the exporter to the port of exporter. That adjustments we don't have to do. That adjustment we need to do when we take only 20% of FOB. Here we are not taking 20% of FOB, actuals we are taking, so leave it. Insurance will be 1.125% of FOB. What is FOB? So that we need to find. Charges for design and engineering work undertaken for the machine in US, not in India. So that will be included. Unloading and handling charges paid at the time of importation. No. Unloading and handling charges paid in India will not be included. Only during the transit and the load airport or port. That will only be included, but in India whatever is incurred, that will not be included. Transportation charges from Mumbai to Cochin port. So Mumbai to Cochin port. So this is post importation. Post importation. So cost of machine at the factory where the goods are coming. So an importer from Cochin import the goods from exporter in US. The vessel carrying the goods reaches Mumbai port first. Mumbai port first. And from these goods, these are transshipped. Transit means it will be included. Transshipment cost will not be included. Transit cost will be included, but transshipment cost will not be included. So therefore, this transshipment cost should not be included. Now, what will be the FOB? First $20,000. Add 1,000 and 100. Then we have design and development charges 5,000. So first 20,000 plus 1,000 plus 100 plus design and development charges 5,000. So 26,100 will be taken as the FOB value. For this FOB value, we need to add freight. Freight charges up to India. So what is that? Freight charges 2,000 will be added, and insurance. How much insurance? 2600 into 1.125%. 293.63 should be taken. Then, so transshipment cost will not be included. You will get the CIF value. That CIF value you need to convert into Indian rupees at what rate? 70 rupees. So into 70 you will get the assessable value. So what are the main points that we need to remember here is that buying commission will not come. Unloading and handling charges in a port in India will not come, and transshipment cost will not come. So that is what we need to remember here. Okay.